Hello, you're listening to Ready, Set, Go Real Estate Investing Podcast, presented by Brandon Elliott. This show will be going over all aspects of real estate investing and is intended to educate, motivate, and prepare you to take action on your first or next real estate investment. For more information, please visit BrandonElliottInvestments.com. Thank you for listening and enjoy.
Welcome back, everyone, to Ready, Set, Go Real Estate Investing Podcast. I'm your host, Mr. Brandon Elliott, and today we have a special guest coming in from the Bay Area of California. This gentleman has been in the tech industry for 13 years and then jumped and transitioned. He was in the operational side of tech and really transitioned into doing fix and flips and the operational side of that, which has been awesome. But the last 5 years has been really growing into the private investment group firms that they're taking down big syndications, they're taking down storage units and many other, random investments in between to get a awesome return back for obviously the group as a whole, but also for investors that are partnering alongside with them. So with that being said, I believe it's been 37 plus deals or so at this point that you've been taking down over the years. And yeah, just really blessed and excited to have you on here. So how are you today, Spencer?
Oh man, I'm doing great. This is a wonderful way to start the day. I was telling you ahead of time before we hit record, Brandon, that talking to someone on the West Coast, they're kind of in the same, at least time zone wavelength. So I've been sipping my coffee and the kids are dropped off at school. This is a beautiful way to start the day. So thank you for having me.
Yeah, of course, man. We're blessed to have you. So anybody out there that doesn't know who you are, where you're from, what you're up to, do you mind just giving that 30,000 foot view of what we can anticipate?
Yeah. So for a little bit more color on me and where I'm at in my background and what we do, thank you for teeing it up so nicely, Brandon. I lead Madison Investing. It's a private investing group. And frankly, it's something that I never would have thought myself waking up every day and excited to work on and help other people achieve what we've achieved ourselves. Prior to that, spent 13 years at 5 different fintech companies, a couple of which were, quote unquote unicorns, started my career into it. Everyone knows them for QuickBooks and TurboTax, and then a series of smaller, earlier stage startups. And what I learned throughout all that is, oh my gosh, you can learn how to make great decisions quickly, but it takes a lot more work to go and build a great framework. So we apply those same learnings and frameworks, decisioning frameworks and judgment to the way we find people we want to invest our own money in, and that's really what we do here is we put our own capital to work for our own family wealth, which is tied into how do we vet private real estate firms and sponsors that are out there that are doing these big apartment, multifamily deals and self-storage deals. Those are kind of the swim lanes that I stick within because I consider myself expert level on both of those. One quick aside I'll say is going back into the W-2 world, as much as the real estate investing community kind of likes to rip on the W-2 world mercilessly because they think it's not where it's at. I look back very positively on much of that career. And of course, there was times of awful, brutal stress. Working at an A-series company comes along with 80 hours in office a week, 100 hours in some cases, not seeing my infant son at the time. We have 2 kids now, but at the time, not seeing him for 2 weeks because I was going in and it was dark outside in the morning and coming home at late at night when it was dark outside as well. So all that context said, I did grow up in a real estate household. My dad was a broker for 30 years and I won't go TMI on here and give my whole life story, but I do think it's relevant as well, Brandon, because never in my life was I interested in finance, right? I used to play in punk rock and metal bands, hence all the tattoos and stuff. And, I was a kid that basically thought that business was not that exciting. And here we are now fully through that career where we went through all these logical stages, stumbling our way through how to become more financially well-footed. And now relying on a salary is not the way that I would say is a way to de-risk your life. Watch my dad and his business kind of implode after we went through a dark decade of losing my brother and a bunch of folks in our family. And that taught me the lesson now. How do we build more income streams for our own family? In the awful event that I, get hit by a bus or something else happens, God forbid, how do we help ourselves get to that point? And now we help every other people that join our group and want to invest in these bigger deals with us to get the same kind of security and prosperity in their life, So it's just a pleasure. But that was probably more than you wanted just to kick it off.
No, I love it. I mean, at the end of the day, you mentioned a couple good things right there. And why real estate is what I was going to ask, but you just answered it. I mean, it's for generational and financial freedom. It really starts off with making sure that your family is taken care of. And then after you put on your mask first, like the plane analogy, then you can really start helping out more people within your group to be able to do exactly the same. And the power of real estate can be so transformational, and it can really set you up for so much success. It is funny how you mentioned that, the real estate industry as a whole, investors, they like to dog on people for, or at least the stigma out there is they dog on people that have the W-2s, right? And I completely agree with you. I personally love doing the BRRRR strategy. I think it's a great strategy for anybody to really start off with, or any investor in general. And without my W-2 in the beginning, when I first started, it's like I wouldn't have been able to do my cash out refinance. I wouldn't have qualified. Right. So, you can transition out of things over time and get into things that you're more passionate about. But, hanging on to the W-2 for now to be able to hit your goals, or even if you love your job, then there's no need to quit. It's like if you're passionate, you get excited about it. It's all about the financial freedom over time, though, and positioning yourself so you can be with, family and friends and have that flexibility.
Yeah, and thank you for sharing that. I mean, I think every person's journey in the working world is different, of course. It depends on the bosses you have, and the ones you like and learn from, but also the ones you learn from what you don't want. I definitely have some of those. I think if you look at the timing when I finally pulled the ripcord, as it were, to go full-time into leading Madison Investing and just being a full-time investor, that was 5 months before COVID. That was around October 2019. So, hey, great timing, right? But that wasn't suddenly a fly-by-night decision by any means. I mean, Jennifer Morimoto is my wife and actually our co-founder and COO for the company. And we have a lean distributed team, but Jennifer is the other leader here. And that decision that we were making, she had her own career. She built for 13 years, separate from mine. I had my career. I phased into going full-time. And it was a labor of love, and just wanted to double down on that point that you're making, which is, when folks say, oh my God, the grass looks so much greener, I want to be a full-time investor. I could spend the whole podcast just on this topic about how folks jump the gun and straight into asset class choice, straight into strategy choice before they even ask the question, do they like working on this stuff? Mm-hmm. And do they have a financial footing? I had to replace, my goal was 70% of my income monthly before I hit that trigger and was ready to go and do this thing full-time. So there's so many directions people can take it.
Yeah, that's so good. Yeah, for me, I had to get out of the rat race, or whatever you would call it, of making sure that all my expenses on a monthly basis, they were taken care of from real estate, from passive, real estate, before I felt comfortable. And I wasn't working in like a big career. I was working, in restaurants that I wasn't happy and content with, but I knew that I had goals, and it gave me motivation. The more that I, dreaded going into work, the more I knew after I clock out, I need to get to work and get this real estate stuff going. So it's awesome. Just depends on, everybody's situation is different. So focus on your goals and then backtrack. I love that. So what does the day-to-day look like for you?
Yeah. Hey, I appreciate you asking that question. I don't really talk about that with folks very often. So, I mean, really, the joy that I get from doing this comes down to interacting with fellow investors that are LPs. And so I don't want to throw jargon at folks. What this is, we did start our journey, and I'll come back to this in a moment, with investing in small local rentals. We even then bought a bunch of rentals out of state from California, long distance style. That was kind of phase 1, phase 2. So I'm jumping straight into phase 3. And what we do now is other LPs or limited partners. Those are passive investors in these syndication deals, multifamily and storage syndication deals. And folks will find us, we don't pay for advertising. We just haven't done that as part of our business model. We really are thriving because of, frankly, referrals from other happy investors. So folks might find us
damn good job. So it's pretty easy to, get the word out. Yeah.
I mean, we're very grateful and for all that, and for people's advocacy for them having a good time, but also just prospering along with us. And they reach out to us and they might say, Spence, we're trying to figure out our strategy, and each profile is so different, right? Mm-hmm. I think that if I had to step way back and just abstract it out to make it relatable for folks, profile 1, the most common, very similar to myself and Jennifer before we went out of our prior careers. You've got a dual income household, maybe 2 software engineers at Facebook. We have a lot of folks in technology, as you can imagine, who worked at big tech. But across the whole country, different careers, maybe a pharmaceutical salesperson, maybe a person that works in project management, dual income household. They want to pivot out of those careers, or at minimum have more swagger walking into the office because they've got 6 to 12 to 20 income streams that they've built up, and they're not little dividends from the stock. They're meaty distributions coming out of these syndication investments. And so I'm talking to these folks about this as they find our group. We want to set some goals around it. And then we're basically vetting the who, which is the most important part of all this, is like, that's why we put our money in. And that's why I fly out and meet them in person and walk their assets in Texas and, Arizona and Idaho, et cetera, all the way out to Georgia, North Carolina, South Carolina, and beyond. We're vetting these teams and we're vetting their deals. And then about half a dozen times a year, we're sending these deals out to folks. And I'm just providing educational material to them if they decide they want to join us in it, And it's invigorating, I think, also because it's just remarkable to me. There's an awareness of these strategies. I mean, same for the BRRRR strategy, to your point from earlier, Brandon. I mean, folks just don't have an awareness out there because none of us were given a manual. No one learns about this in school. People don't walk around and say, hey, yeah, in addition to dropping money into my 401k and getting the company match, I'm also going to go do a BRRRR project on the side, or I'm also going to, allocate $100,000 to drop into that syndication later this year. We're all taught to go dump money into retirement, but we're not necessarily educated on that. So that is just a joy for me, is to help folks understand like how to get into ones that they can feel good about that are risk mitigated, risk adjusted, and can people go find one of these that doesn't work out? Of course they can. And we're always very upfront about that. And that's also why it puts people at ease that I'm actually registered with FINRA in the SEC. That's the same kind of stuff that banks are held to in terms of transparency and rigor and all those things. So that's my day to day. And of course, connecting with new sponsors. We don't jump into deals with strangers. So typically when a person who's finding the deals, they reach out and they say, we would love to feature our new deal. We found this amazing property. We want to go do a value add plan on this 200 unit apartment building out in the Midwest or the South or the Southeast. Can you show this to your investors and, bring their capital and help us with investor relations, infrastructure and stuff? And I tell them the answer is not no. The answer is just not yet, and so let's go figure out how we can potentially do this in the future.
I love it. So overall, a majority of the day is really being focused on raising capital, as well as, investor relations, as well as some acquisition side of venting out some opportunities for the group as a whole.
Correct. Yeah. I mean, and also I think just operationally, now that we have kind of a lean team that supports us in different parts of the country, for compliance and operations, et cetera. Of course, I didn't leave behind all the management stuff that I had and cherished in my career prior. At the age of 26, for example, I was leading teams of 200 plus people, and I loved that. But man, oh man, people management is not a simple thing. It's taxing and rewarding. But some of my day also, of course, goes towards that and vetting deals. Just looking at the numbers, because I'm a very big operations nerd. I would say I love these asset classes because of their ability to be better predicted. And boring is a great thing. I love the best kind of boring. If I can see on paper, and you can dial this in on BRRRR all day for a BRRRR strategy, of course, how is this going to play out when it comes to the financial assumptions? Because the big de-risking of this stuff happens at the who, but on the deal level, it happens in terms of those financial assumptions going in. So that's really what populates my day. Is you nailed it. Investor relations, helping people clarify what their goals are, right sizing for if a deal does or doesn't make sense, and then vetting deals and markets, looking at the job supply and looking at the demographics in a given market, because we don't invest in our own backyard, unfortunately. The only property we still own that's an investment here in California is a duplex, and it's in Vallejo, California, about 45 minutes north of me. I spent $430,000 on that years ago, and it cash flows $200 a month. And that is not what you call a cash flow home run.
That's one of those things that could, I wouldn't say label it the boring that you were just talking about, but safe and slow and steady will win the race with that. The cool part about California is appreciation always does well.
Yes, it does.
We own properties out here as well. And really to make the numbers work, to make it a little bit more exciting, is doing short-term rentals, right? Like Airbnb or just getting more income coming in, because the numbers are so high. But the blessing behind it is if you can hang on to these and have somebody else paying down your mortgage, then, over time, it is going to be such a blessing with the equity that you can build into it. And, appreciation is always like icing on the cake. You should never bet on it, but boy, oh boy, it does treat you well in the future, which is very nice.
I mean, can I add one thing to that?
Please, yeah.
Okay. I think for folks in reference, like, I'm sure you talk to folks in your network in California on the coast all the time. And I mean, probably back in the hometown on the other coast as well, because these coastal markets have a lot in common when it comes to remarkably high price points. And so here we kind of went through these three phases. And I think these three phases are so natural that they hit the majority of people. And we happen to live in the Bay Area. I sit in this little island city called Alameda, directly across from Oakland and San Francisco. And once we bought that first duplex, Brandon, and we realized, wow, that took like a whole summer, literally sitting in the car, driving around these local markets with Jennifer, our infant son in the car. This is how we spent our free time, our weekends. We were so nerdy about it to get that one darn rental. And once we bought it, it clicked for us. We need to get clearer on our goals. So then we set a very crystal clear number over the course of a very intense goal setting weekend, not to go into a therapy session, couples therapy style, but this is the stuff that really matters that people try to skip over because they think they can get away with it. And we had to pick a number. What is the monthly income number from passive and active sources that's going to get us to where we got to go? So that $200 a month for a $430K rental in California ain't going to fly. We need to spend our money more wisely, because that was over $100,000 cash outlay for $200 a month in cash flow.
Yeah.
And, so then we look further, get comfortable with long distance.
You want to compare it, when it comes down to, okay, the money, the time, the energy that we put into this deal out here for the return on this of $200, a month, and yes, of course, the appreciation could over time, but let's look at the grand scheme of things. And then in comparison to somewhere possibly in the Midwest or any other state for that matter, that can, same apples for apples, down payment and time and energy invested, that could potentially pull off higher ROI on bang for your buck for your money, And that's the thing that, it's important to be crystal clear on it. And when you're first getting started, or even, throughout the process, it's kind of making that time that it takes to really be able to have those team meetings quarterly or however often that you need to make sure that, hey, are we on track with our goals, or are we starting to get off track from God knows what with all the distractions that we're getting hit on a daily basis? So there's a couple of things that I want to talk to you about. I think a lot of the listeners could potentially benefit from us talking a little bit more on getting clear on those goals. I know many people only talk about it in the very beginning of the year, right? It's a great topic in the beginning of the year, goal setting. But we just last month, we're halfway through the year. We're more than that at this point, and we only got a few months left of the year. I think it's very important to get very laser beam focused back into how are we going to finish the rest of this year strong to be able to hit our goals in 2022 and to be able to set us up for success for financial freedom. So if you have any feedback or thoughts on that, also would love to hear more about managing so many people. At such a young age, you were able to get promoted to a position where you're managing 200 plus members. That's a lot of people, my friend. So it takes a lot of power in so many different areas. So I'm sure everybody could benefit from how to lead people better. So yeah, whatever you want to chat about first.
Yeah, happy to go. Really refreshing to go there. I think it's fun to talk about. First and foremost on the goal setting, I looked back at what does financial goal setting mean to me when I was in my younger life? Younger for me, I'm 39 now, but if in my early 20s, let's say, fresh out of college or going through the first phases of my career.
Sure.
And at least I had enough awareness to go and say, okay, let's look at that pie chart for retirement account, right? That you get from your custodian or your job. They say, have an aggressive portfolio if you're younger and then dial it back over time, yada, yada. All of that never really clicked for me as that relevant. Did I dump money for years into my 401k? Absolutely. And I would celebrate it with a badge of honor, right? But what really clicks with me is simple strategies, like really tangible stuff. And that's why Jennifer and I sat there 2 whole weekends. The kids had to go to a sitter just to focus on this. This weekend was intense. And I'm sharing this kind of behind the scenes stuff, as messy as it sounds, because if someone is single, this is going to be more straightforward. But if they have a significant other, which many people do, this is how intense it gets when it matters. And we had laughter, cries,
Yeah.
reconciliation, multiple cycles over just to get to that one damn number.
Yeah.
What is our number to cover our life needs and not feel like we have to be completely bootstrapped? To the point where I can't buy my cup of coffee because I'm not going to give up my coffee. And,
that sounds like Jennifer, my Jennifer. I know you have a Jennifer as well, but
that's
she
right.
cannot give up her coffee. And it's not a negotiable type of thing that she puts on the table.
Absolutely not. Like Jennifer and I both like our cup of coffee, right? And so that one number is what I encourage folks to go and dial in very clearly. And because it's nice and simple. And so you put that out there, we had our number, and then we're going to start whittling away at that with active and passive income. We set a goal of 15 years out from that time. And that sounds ridiculously far out, but why did we do that? That was because I thought about a former mentor of mine and what he told me for goal setting. And he said, if you set a goal that's too aggressive, too fast, it gives you the ultimate cop-out excuse to say, there's no way I can hit this thing in time. But if you put it far enough out, remove the time excuse completely, and then sit there and ask yourself, well, why can't I go do this? And you're challenged by saying, how do I go get there now? How do I go make this happen within 15 years? That was too long for us. After a week or so, we were like, we got to chop this down to 7. And so we're basically already there now, which we're very pleased about. But that clarity was important. And I sort of put in on the goal setting first.
I love it. That's so good. So I was going to say 15 years is a good amount of time, but it's awesome that quickly after you guys realize, hey, we could probably scale this back to 7 years. Many people I forget the saying behind it, but I'm just going to butcher it. A lot of people, they set their goals and think that they can do so much in such a short period of time. And then it's a daunting feeling when you don't hit those. And then for their long, 20-year goals, they don't put enough emphasis on how much you can be able to really take down and be able to hit goals. So I've had buddies of mine and friends that have done crazy things in such a short time frame in a year, but that's not what I would say is the average, right? So you got the exception, but what is going to be realistic numbers that you can really be focused on, laser beam focus, and kind of just backtrack. Hey, if I want to hit this in 7 years, what do I need to do on a yearly basis? What do I need to do on a quarter basis, a monthly basis, a weekly basis, a daily basis that can really set me up for success to be able to hit these goals? So I love that. Just like you're mentioning, if you do have a family, if you're a single person and you're just thinking about your situation for the time being, it may be easier. But regardless, if you have a family, you got to put all distractions to the side, be intimate with your significant other, and really plan that full day out for the good times, bad times, the arguments, and everything in between to make sure that you guys are on the same track and know exactly what you want. So you guys are on the same path of where you guys are heading, because there's nothing more frustrating if you don't have those meetings and you guys both think you're on track, but you're going in 2 different directions, and that's not going to unite anything in the family. So I appreciate your feedback on that. That's awesome.
Yeah. And that visual that you did, I know maybe folks on the audio only can't hear it, but I think you articulated a point just even with the hand gestures. And I think it's important as well, is think about if a week out from setting goals, Jennifer and I are not aligned as much as we thought we were. Imagine if you just let that unspoken topic linger for a period of 2 to 3 to 4, 5, 6 months. It's like a line graph, right? It's just going to keep splitting over time. So by the time you finally check in, you guys are on different planets. And that is just such a compelling way to think. I'm a very visual guy. Yeah. And so I think early candor and having those discussions is key. But I do want to hit on the topic that's so incredibly near and dear to my heart, which is the leadership and the management stuff, and I think shifting over to that, never in my life did I think I didn't really want to be a manager. I didn't want to be a manager of people or a leader. And now, I've devoured more leadership books and managed more people than I can probably count.
What's funny behind that is all good leaders, in my personal opinion, that I've noticed, they don't typically want that position at first. And the people that want those positions typically won't be the best leaders.
Right.
And that's just my 2 cents. That's my humble opinion behind it that I've seen over time. But that is so good, and you getting to a point at such a young age to be able to manage 200 plus people. I mean, that's incredible. So talk to us about the process behind that.
Yeah. I mean, frankly, it's going to sound more straightforward when I break it down the following way, not glamorous whatsoever. And to your point, it's making a couple of decisions that were pivotal. Like I know the exact couple of decisions that made the difference to get there. And then of course, there's always a smidgen of luck, and everyone's at a different starting point, not delusional about that. Right. But fresh out of college, I somehow got myself and found the courage to go take a sales gig, an inside sales gig. I'm an introvert. I don't go out and seek to go and network like a madman. I can have these discussions. I cherish one-to-one discussions like with you, Brandon. Yeah. But put me in a networking scenario and I need to take breaks. Yeah. So, I do a sales gig for a year and a half. I think I'm some pretty hot shit. Sorry. And then I end up going and having like an eat, pray, love moment, traveling the world because I never got that in. And then ultimately, I realized I have this moment of clarity sitting on a beach in Croatia. This is like 2007 or something. And I'm like, you know what? I think I got to get my stuff together. I'm ready to be more serious. And so I reach out to a former boss and, he and I really connected. He's actually younger than me. We're very good friends. We talk daily now. He's like a mentor. And at the time I said, would you please take me back? I'm ready to be more serious this time. And they were launching a new location out of state. And they said, you can come. It was a really hard interview because they knew that I was like kind of doing the boomerang thing. And I had to go and get paid. I think it was at the time like $14 an hour, and which is a perfectly respectable amount of money for a person who's entry level. But it was in a call center at the time, and it was like, go do a support job in a new state where you don't have any familiarity at the time, and network, and you're going to go out and do this, and you're going to move on your own dime. And if you do that, you'll have a shot at leadership. And so I did that, said yes. I have never been so focused in my life at that moment as I was at that moment, devouring leadership books and hustling extraordinarily hard, and then working my way up to eventually run the whole facility for over the course of 5 years, And so that was way more responsibility than I was ready for at the time when I got it. And I was so in and over my skis, but that's how you really learn, is when you get thrust into the fire, right? And so then I ended up taking progressively more challenging jobs at earlier stage companies. Even at a later time, there's one other decision I'd highlight where I was offered a chance to go join like a super high velocity startup surrounded by people way smarter than me, like just across the board, just incredibly high horsepower, brilliant people. And I would have to take like a 40% cash compensation cut, but I would learn faster than I've ever learned. And I took that cut and I took that job. And that, in hindsight, was one of the best decisions I ever could have made. That was the hardest year I've ever had at that job. It was like crushingly hard work and 80 to 100 hours a week. But that's the kind of stuff that ultimately gives you the skills and experience to show up better over time. But yeah, I never wanted any of that leadership stuff. It just ended up being that, I don't care about power, really. It's just, and more, if some people do, that's fine. I don't judge them for that. It's just not really interesting to me. But I do try to help other people and succeed in whatever that means for them. So.
For sure. No, I love that. It's funny because you might be able to like crush it at whatever you're doing within the business. And then once you get to a position where, okay, well, now they want you to lead other people to crush it as well. It's a whole different learning curve. And for a quick story, I was doing door-to-door sales back in like 2011 for Kirby vacuum cleaner. And I was very good at it. I got to a point where I was very good and I was making great money, like $2,500 a day by selling several vacuum cleaners through the day. And I was knocking my whole team into doors so they could do their appointments. And they got to a point where they wanted me to lead a team, a van of 6 to 10 people. And my numbers just started shrinking so much because I was spending time and energy of leading others instead of, focusing on what I knew how to do best. And it was a pay cut, it was a pay cut in multiple ways, because if they all performed, then I would get paid more. But the time and energy and nobody performing, it was a tough year, I'd say, because I had to become and learn how to be a good leader. And I wasn't at the time by any means. And every day I'm learning. But I think it's one of those things that, just like you did, you took almost an investment on yourself. You took the risk of taking the pay cut, putting in the extra time, the energy, the hours, being around just gangsters in your industry that are way smarter, way more talented, so that you can learn from. And after that year of torture, it really builds that foundation even stronger for you to be able to crush it in many other areas and develop that leadership skill. So I commend you for doing that. It's one of those things that the majority of others out there in the world, they hear all the downsides to it and like they write it down on a piece of paper, pros and cons, and they're like, oh, hell no, I'm not doing this. I'm not doing any of this. It sounds horrible, but it's that risk factor that you're putting on yourself, like an investment into yourself to be able to, catapult it and skip so much years of pain and suffering and actually get somewhere. So I love that.
Yeah, thank you for sharing your story as well. I mean, door to door, anyone who hasn't seen that in action, I mean, I can't ever say I was always an insight guy, but I've seen people on making the walks, and it's like that is so intensive that leading a team there and doing that well is it's incredibly impressive to me. So that's really badass, Brandon. And so I think in terms of the sacrifice made by ignoring more money for the sake of more money. Not to say it doesn't have incredible value, of course, but investing in oneself is exactly how I'd categorize that decision point that you kind of read back to me that way. And I think self-awareness is the root of all of it. Like a person sitting there, and I had to sit there and ask myself this, like, am I ready to be outside of my comfort zone at this job literally every moment of every single day for the next forever until this job is over? And I decided, that was a yes for me at that time. Some days I came home and I was like, that was a really awful day.
It was a bad decision saying yes back then. But, you take it a day at a time and one problem at a time. And over time, it makes you a better individual and a better leader in so many other areas.
Yeah, you become not just tougher, but you become wiser, and you also understand yourself better. But I love talking philosophically about leadership stuff all day.
Yeah, it's good. Yeah, more resilient for sure. I wanted to talk to you about the market changes and so forth right now. And if you guys are adapting, nobody's got that crystal ball, right? But damn, I would say in the last month and a half, 2 months, the market has switched up a bit. Mm-hmm. And I believe today is that lucky day that I believe they're going to be announcing whether or not we're in a recession or not, which I'm sure we all know the answer. But we've seen it on some of our fix and flip projects. We've seen there's a lot of fear in the market, I would say, to sum it all up. Stock market crashing several times, the crypto doing the same thing, the interest rates going up, the inflation, the news and everything else kind of just promoting. It's almost a good shitstorm, for lack of better words, that's really turning. And the last couple of years, just the government printing so much money that somebody's got to pay for. What's your 2 cents on this? Like, what is your feedback on where you think we're heading, and how are you guys positioning yourself moving forward? Would love your opinion.
Oh, happy to talk about this. I'll take a step back before we go into this and just simply say it is so much more, dare I say, fun going into this moment of volatility when I have literally been living and breathing, similar to you, like living and breathing everything about investing, from reading, economy reports, reading finance reports, doing, thousands and thousands and thousands of units of transactions, and investing our own money across all these different asset classes aggressively for the past 5 years now. And that goes take that further back to even living and, working within a real estate business when starting at the age of 6, right? So I wasn't exactly paying attention to reading finance reports then, but compare that to like 2008 when I was just purely in the corporate world. It's kind of like the average lay person out there, most people, they're sitting there going, oh, we enter bad time. Bad time mean me better put money under bed mattress, right? Yeah. And that is such a dangerous place to be.
Dangerous. That's good.
And I think that coming into it now, if anyone out there interacts with a very focused, real estate investor right now, the one who's worth their salt will probably have the following reaction. They're going to say, oh, this is getting exciting.
Oh, yeah.
And the reason you and I know that is because this means this opens up and unlocks buying opportunities that you wouldn't find otherwise. And so at a high level, my interpretation of what is occurring now is the real big change in the short term, as far as effectively what is occurring, is borrowing money just got more expensive, and a lot more expensive. And as a result, there's less liquidity, which is the very Wall Street way of simply saying there's less investable money floating around from all these different sources and pipelines, right? And so for our business, we deliberately picked, and I'm in love with hard assets. And the hard assets we focus on, doing BRRRR projects on small multi or large multi is the same, just different sizes. We focus on large multifamily and large storage facilities. And the reason I like large multifamily in particular is because it's needed.
Yeah.
The demand is here right now because of an underbuilding trend. The data is all there to back this up from the past decade. Building hasn't occurred at a pace that has kept up with the growth. So now in places such as Phoenix, Arizona, Atlanta, Georgia, Raleigh, North Carolina, Greenville, South Carolina, like I could keep going on and on of these markets that we've invested in ourselves and love. These are places where this wasn't the same conversation in 2008 and 2009. That was a totally different recession. And everyone is just a different animal altogether, including the trigger points for them. But now we feel great about it, frankly, because have we stopped investing? Absolutely not. We're still actively, we just had a really positive, strong response, for example, on a storage deal, and one of the best responses I think we've ever had of folks investing alongside us in that deal. And so that's the kind of stuff that we like because people need places to live. Unfortunately, higher interest rates tends to correlate. It's not the same getting an interest rate increase by the Fed to get higher mortgage rates. They're different rates, but the correlation is going to be that mortgages are going to be more expensive. And as a result, people can't buy houses as well as they could.
Yeah, it's going to kind of wipe out certain individuals that were right on the edge there. I do want to encourage everybody to keep in mind that it's it has been the record lows world history of the lowest interest rates in the world for the last 5-6 years. So it's just one of those things that I feel like a lot of people get entitled to. And when the interest rate's at 5% right now or so forth, obviously it is more expensive than it was. And as it goes up, but don't be one of those people that's burying the money underneath the mattress, because right now is the opportunity. And also it's going to get even better in many cases. But it's also one of those things that the interest rates aren't necessarily going to get lower again, and it could over time. Nobody's got that crystal ball, but I would definitely encourage that. If you think the interest rates are high now and that's keeping you out of the game, or you could qualify, but you don't want to pay the taxes on it, you don't want to pay that extra expensive money, wait till it gets even higher.
Right.
And then you're wishing, oh, shoot, I wish I would have got in when it was 5 or 6% in comparison when it's 8 or 10. Don't get entitled to that is what I'd say.
Oh my gosh, preach. And I know that this is an area that is literally one of your areas of deep expertise because you work on the credit side for sure. And that said, a stat that I just saw, this was in the last week, fascinating graph. And this will track with some folks, but if not, I'd encourage them to go Google it and look up some data. But I believe in the first time in modern history that the inflation rate, the 9.1. So money is losing value. Your purchasing power of your dollar is losing its power at a rate faster than we've seen in recent history. And the real point is 9.1 inflation, it's higher than the current interest rates. And so on mortgage rates. Yeah. And so if people think about that, to exactly
do the math.
I can borrow money. This money is going to cost me, maybe 5% on this mortgage. But my money was dying sitting in a savings account at a rate that's probably close to 9% anyways. And so,
dying. And that's the key point here. It's it's dying. The 100,000 that you had, and understand that the government will tell you one thing of 9%. They were telling us, 6, 7, 8. Now we're at 9. What do you really think it is, though?
Right.
I mean, I imagine it to be significantly higher in many cases. But let's just say it's what the government's telling us, right? At 9.1%, or whatever they're saying today. It's one of those things that your 100,000 just lost, $9,000, $10,000. So you want to be really mindful of. You don't want this money just being buried and waiting on that great opportunity. Put your money to work right now. And I encourage, if you have any type of active income that's coming in, double or triple down on that to bring in more. And then as it's coming in, put it to work. Put it to work, buy assets, do value adds, and it will always take care of you in whatever season that we're going through. So that's my 2 cents on it. I appreciate your feedback and your opinion on it as well. It's just do the math, right? Just like you said, it's a no-brainer once you see how much they're claiming that we are losing on money versus these interest rates, we still got room there. There's still an arbitration to be had.
Yeah, talk to a boomer about what it was like in the 80s when they hit their 18% mortgage rate, right?
Yes.
And
thank you. Yes, exactly.
I mean, context is a beautiful thing.
Yes.
And so I think right now they call these rates outstanding. And so they are. And I think entitled is the perfect word for that, Brandon, when you said that earlier. And last but not least, I just wanted to mention to folks, I haven't ever pitched anything since we've launched our business, right? And I bring this up because I just want folks to hear these messages that we're discussing here and do something to better play offense. And that's kind of the term that we use in our household is financial offense. Is like,
good.
It helped us wake up to the fact that, to exactly your point, we used to just do the very traditional thing, dump money in 401k, and that's still fine. I'm not actually anti 401k altogether. It's just we don't do that first now. But people need to find ways to take that dollar and instead of having it die in a checking account or a savings account, they need to go find a way to have it not only keep up with that inflation, they got to find a way to exceed.
Yeah, outperform it. Yeah.
And like wherever they happen to find it, I just want to give folks the extra nudge and spark. And I hope our discussion today does that for one person, and that's a win. Like, go educate yourself and do something about it. Don't just complain about it. Go do something about it. And is that higher risk than an FDIC insured savings account? Well, yeah. And that's what the risk is rewarded with, is like, if you take the risk, it might go not well. That's why I spend so much time, for example, researching and discussing and finding competent people who are going to do these types of deals where it's risk adjusted, right? And so it's
professionals. Yeah. I mean, there's professionals like yourself that have put in the time, the energy, the resources, the team in place to be able to hit successful numbers. In my personal, humble opinion, biased opinion, real estate investing is going to be your safest asset class that can really keep an eye on things that you can be able to get transformational wealth, like really something that will change your life in a short period of time. In just a few years, you can see breakthroughs in your finances and over your family as well by simply educating yourself and getting calculated risk, which in my opinion, you're going to, in other assets or starting businesses and so forth, you're taking higher risk for potential higher reward, but higher risk means, it's not going to be those safe, those boring, deals that you like, right? It's not going to be those deals that you can be slow and steady wins the race. And this deal is going to perform with confidence and boldness as you go into purchasing it, right? So I think those are all great points. Spencer, I appreciate you so much for your time today. Any last words that you want to leave, or how can people actually get a hold of you as well? I would like to know last thoughts as well on where are you and the team going in the next few years? What kind of goals do you guys have? Anything that myself or the listeners could do to actually get back to you?
Yeah, well, thank you. And this has been clearly a really fun discussion. So thank you for nerding out on stuff that I love talking about here too. And hopefully it's helpful for the listeners.
Oh, likewise, for sure. I know it is.
I had a great time. So
me too.
So if folks want to reach out and connect, always happy to do that. It's at madisoninvesting.com. We do actually have a monthly newsletter. I think it's pretty robust and substantive. It's not fluff, but we also, folks can book a time for, just like a goal setting session with me. That's a non-obligation thing. All I would ask is that they bring their normal self and be friendly. It's not like an obligation or paid thing, but we can talk about the market and nerd out on real estate stuff, just like we did today. I think in terms of parting words, I would just say that anyone who thinks they don't have the time to go work on this stuff, go check out a book called Essentialism. It's one of a few, one of 2 or 3 books out there that I've read it 3 times at this point. It's the first book I read where I was like, it gives me literal ways to learn how to say no to people in socially graceful ways. And that matters because all day people love to take their 24 hours and they spend that doing stuff that's really fun. Sure. Do I like going to the bar? Of course. Do I like having coffee and lunches with people? Of course. Do I do those things? Of course.
Do I like scrolling on my phone and all these other hours that I'm wasting away? Yeah.
Yeah. I mean, I love doom scrolling, doom scrolling when I'm not really thinking about it. All these things are a way to spend time, but find ways to find I found 10 hours a week when I was working full-time leading teams at a very demanding W-2 job while being a dad and a good, decent husband to do 10 hours a week. I woke up early. I set a schedule and a rigor. So just encourage folks to go out and like find the way to empower yourselves and take the control over your financial future, man. It really is a choice. So I think for most people, it's a choice.
That's so good. Yeah. And it comes down to how bad you want it. Anybody that's saying, well, I don't know where to look, I don't know how, it's like, start with my best friend Google, and then work your way up. Check out podcasts like this, YouTube, books, read, educate yourself, and when there's a will, there's a way. So the more you care about it, just like you care about any other things that you're putting your time and energy into, you'll see yourself being more educated or going down that path. So it's easy to just indulge in things that make us feel good for the time being, but isn't necessarily productive in the long run. But if you want change in your life, then I would encourage you to do something different from the day before or the day before that. And you'll see it, not instant success like we all want nowadays, but you'll be able to see progress and you'll see it pay off faster than you would assume.
Yeah.
In many cases, as long as you have realistic goals. But if you don't have your goals set up, then reach out to Spencer and set that up, because that sounds like an awesome no-brainer in many cases. What's the goals that you guys have for this year? Anything that myself or the listeners could do to give back to you? I appreciate it as well. You just gave an hour of your time. So by all means, would love to give back to you.
Well, I mean, I think that really our focus now kind of in the next kind of 6 to 12 months is not that different, even given the current volatility, because great investing is mostly about temperament. It's not even about intelligence. It's not about talent. It's about temperament and not succumbing to the outside world. Paying attention though, like watching reading the tea leaves, reading the reports, being aware of the macro and micro events. And so our focus is going to be, and no shockers here, investing in assets and hard assets that are going to continue being needed. People need places to live. People need great communities to live in. They also need places to store their stuff when they go.
I was going to say in storage units. Yes, it's such a no-brainer. The numbers don't lie on that.
Yeah, and those are our areas of expertise and focus. And now we do occasional stuff that is niche and really compelling right now, I think more than ever, because it's not correlated directly to either of these asset classes, which is like this. We don't have time for this one in depth, but like I'm just investing again into an ATM fund, like automated teller machine fund, so it's like, so that type of stuff is non-correlated. And so we're looking for more opportunities like that, where it's off from correlation to like the stock market.
Yeah. I love that, man. That's awesome. Well, I greatly appreciate your time so much, guys. You are definitely going to want to reach out to Spencer, and just amazing feedback. I know that I'll receive on this one. So thank you so much for your time again. So check out MadisonInvesting.com and be able to book your call today. So with that being said, appreciate you guys all so much for tuning in as always. If you haven't already, make sure that you hit that subscribe button to Ready, Set, Go Real Estate Investing Podcast. That's Ready, Set, Go REI Podcast. Hit that subscribe button. You'll get the newest notification every single Monday. And then after listening to this amazing episode or any others, do me that solid favor by leaving that 5-star review. We'd greatly appreciate all the love and feedback. We have a big mission to be able to educate, motivate, and prepare you to be able to take action in real estate investing. And with that all being said, if you guys need any credit repair done for you services, go check out creditrepairmobile.com. Otherwise, if you are really looking to get educated on credit, like really understanding from beginning to the end of how the banks and lenders are judging you, so you know how to play the game, how to be able to fix your own credit very quickly, or friends, family, even create a business from it, and then be able to get massive funding from the banks, doing a mass apply and get several 6 figures, even 7 figures in funding over the next 12 months, then I highly encourage you to check out creditcounselelite.com. That's www.creditcounselelite.com. We show you how to be able to get educated, fix, build, and then be able to leverage these funds into real estate investing, private money, hard money, e-commerce, you name it, whatever goals you may have. We want to show you how to be able to scale that and be able to fund it with credit, just like the banks have been doing to us forever. Let's flip the script on the banks and be able to put it to work. With that being said, guys, love you guys all so much. Appreciate you as always. We will see you on the next episode. Spencer, I appreciate you greatly. What a blessing. You have an awesome day.
Thank you, Brandon. It's been an absolute blast.
See you guys.
This has been another episode of Ready, Set, Go Real Estate Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining. Until next time, God bless.